Hello and happy 2015 New Year to all. I hope everybody is well. Hope everybody has enjoyed the festive period and had a good Christmas, a good New Year, and now it's we're back to action basically. It's 2015, the year starts, volume picks up, no crazy wild swings in the markets based on lack of participants, and irrational, illogical price action comes to an end. Okay, so basically, I'm giving you an intermarket analysis view of the FTSE 100 for the date commencing the 5th of January 2015. Yes, it's 2015, folks. The year has gone very quickly, and a new one begins. Okay, so hope everybody's well. I've just come back from London. I did enjoy the fireworks on New Year's Day. It was on New Year's Eve, shall we say. Either way, it was good. I enjoyed the parade as well, the New Year's Day parade in London. That was good. And overall, it was a good experience. It ushered in the new year with immense excitement, although it was very cold in London. As you can see, I've got a flu and still trying to recover, but it was very, very cold. Okay. Right, let's get to analysis. Okay, so fundamentals going into obviously 2015 Grexit phase. Okay, so there's a lot of reports. If you want to read the Guardian, you want to read the Telegraph, Reuters, Bloomberg. Basically, there's arguments for and against. Okay, for risk off and for risk on. So basically, a lot of the fears, I mean, to a large extent, have certainly been factored in here. But again, uncertainty is the worst thing a stock market needs. Okay, and certainly dislikes uncertainty, and uncertainty obviously equals a sell-off, which is a risk-off scenario. Okay, so basically Grexit phase. So it's all about whether or not the election now, Mr. Samaras and obviously Sipiris, the Syriza government basically, and obviously. What will happen if they come to power? Obviously, they are in the lead at present with regards to the opinion polls, although we all know what happens with opinion polls. But either way, they are in power, and given the fact that the previous chap failed to get re-elected 3 times, and obviously it's come to snap elections now, which is 3 days before the ECB meeting, which is quite interesting. From my perspective, I mean, I'm not trying to be a conspiracy theorist, but it certainly is convenient that the Greek election is 3 days before the ECB meeting, so that certainly gives them cannon fodder, or certainly gives them some sort of clout, obviously going into the ECB to keep the Germans afraid, and convince the Germans to come on board in terms of QE. Hence the reason why why Draghi did the speech last week on Thursday or Friday, and he talked up QE. So i.e. obviously low growth and lower inflation. So that's going to be very interesting, but I'm going to tackle that in my European market analysis. But just bear that in mind, because obviously intermarket analysis states if European markets go higher, then the FTSE goes higher as well, and vice versa. So, and adding the fact that if you do get QE from the ECB and the Germans are on board as well, then obviously that will help commodities put in a base, the commodities lift higher, and we all know what happens when commodities lift higher. FTSE will lift higher as well. So that's going to be very interesting. So bear that in mind. So Grexit phase. Okay. So given the fact that Germany over the weekend has stated that they have contingency plans and are ready, and if obviously Grexit actually comes to reality, Greece obviously leaves the eurozone, it won't phase them at all. They're not very concerned. They're not worried. I mean, any type of talk like that isn't exactly going to help the euro. I mean, the euro's already been clobbered. Okay, if you bring up the chart of the euro, I did post a chart up today on Twitter, so you can look at the euro chart there. I'll just bring it up for the sake of the video. Here we go, euro USD, and as you can see here, we're on the verge of breaking a 1.2 handle, and obviously going lower to 118, and next level 115. So I mean, if although you can argue that this is into major support, one could certainly argue that, but it certainly doesn't bode well. I mean, we dipped almost below 1.2, so that's going to be an interesting level. Okay, and the 60-minute chart, I mean, this is just as bearish as they come, lower lows, lower highs, and the sell-off continues. I mean, that's confirmed with the Aussie and the Kiwi making new lows. Well, realistically, it's the euro that's forcing the Aussie and the Kiwi to make lows. But anyway, that's another topic. Again, I'm not going to digress. Okay, so that's interesting. Now, obviously, the lower the euro falls, the higher the exports, or the more demand for exports in the eurozone, and that in itself is obviously spurring growth in the eurozone. So that's certainly an interesting perspective as well. So whether or not they talked the euro down going into the ECB and then don't do any QE at all. I mean, technically they've already done QE because the euro's down to 1.2. That is QE. I mean, if that's not QE, what is QE? I mean, the whole concept is you debase, you debulk your currency, and that obviously helps the export sector. So one aspect of QE is already in motion regardless, okay? And obviously Grexit phase, one can argue the euro's down due to Grexit, etc. Yes, that certainly is a case, and obviously stock markets have reflected that. So there's there's arguments, and I mean there's counter arguments. So the argument for a sell-off is the fact that Germany's talking about a Grexit, and I've said that they're not really concerned about Greece leaving the eurozone. And then the other side of the argument is that we have an article out now, which I've tweeted, that German government confident Greece will stick to reforms. This is a Reuters article, so it counters the previous article on Reuters itself. So German government wants Greece to stay in the eurozone. There are no contingency plans to the contrary. Okay, so that previous article or that rumor has certainly been denied. I mean, that itself wasn't a rumor; it was based on a Reuters article. So, this type of news flow will cause wild gyrations in the market, folks. That's basically what I'm trying to explain to you. Okay, and these type of rumors are going to cause wild gyrations. So any German minister speaks against the eurozone or against QE or against Greece, etc., and that will obviously create gyrations in the market. So that's going to be interesting. Overall, it's net is a negative because, like I said, any uncertainty is not good for the stock market, and that's my summation and conclusion there. The next concern is going to be global growth, given the fact that weaker US data obviously came out last week. Again, that's going to be a concern for the European and Asian markets. Add in the fact also that oil prices certainly are under immense pressure, okay, and certainly are vulnerable given the fact that you've had weaker growth on Friday to make new lows. Although, having said that, I do need to highlight this pattern to you, and this is something that you certainly need to keep an eye out for. Let me just see if I can bring this up. I need to find it. Here we go. Okay, there was an inverted head and shoulders formation which failed, and as you know, the reason why it failed obviously is the fact that we had weaker US data. Okay, now you are building a base here. Okay, this is hypothetical, so obviously take it with a pinch of salt. Okay, so given the fact that we made this base now, so a double bottom base, if we do move higher, then there is an argument for obviously a higher low to be put in, or an inverted head and shoulders formation. So we'll keep watching oil and see if this is a base, because there are a lot of geopolitical concerns with regards to oil bases or oil fields being torched. Okay, whether I'm not sure if it's Libya or Sudan, I can't remember now. So, and given the fact that the Iranians have started talking about concerns with regards to a lower oil price, just keep that in mind and bear that in mind. Okay, so it's very, 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 very important. Okay, so having said that, there is a symmetrical wedge pattern as well. So if oil were to make a new low, given the fact that we've had weaker data and Grexit phase, etc., obviously hamper demand, that will certainly cause the oil price to make a new low. What if you do go and break $55 on Brent crude, then obviously you know where the FTSE is going to go. Okay. If we make a base here and hold this level and start moving higher, then you know which way the FTSE is going. It's going higher. The other interesting thing with regards to the FTSE 100, and now that I've talked about the euro as well, is the sterling chart. Now I've actually posted that up on Twitter, and I'll share it here again. Given the fact that the euro obviously has moved lower, the sterling price obviously has moved lower as well. Now we all know if sterling moves lower, what does that mean? It means, number one, interest rate expectations have certainly been pushed back, okay, which is good and bullish for the markets. And number two, the actual inflation or deflation concerns are certainly there, okay, which again is potentially negative for the market. But given the fact that you're pushing interest rates back, and given the fact that a lot of people are talking about the BOE being the first to raise rates, or one of the first in the eurozone, then that certainly questions that. Okay, although having said that, the counter argument to that is that we've had weaker data out of the UK recently, so that obviously doesn't bode well for indices, etc., going forward, or equities going forward. But overall, it's a net positive when sterling is falling. Number one, like I said, the interest rate expectations push back, and number two, the biggest of all, is exports. Okay, Biggest of all is exports, okay, and we'll discuss exports when we come on to the FTSE 250, okay. Right, so I've given you arguments for and against there, but overall, like I said, Grexit fears will dominate, global growth concerns will dominate, so there'll be two negative overriding factors, and obviously that the side effect of that is obviously oil prices falling lower, and that obviously doesn't bode well for the FTSE 100. So I've given you an insight there with regards to the fundamentals, and like I said, Grexit fears are going to be the dominant force, adding the fact that weaker data from US. Okay, now let's go to the technicals now, because I don't like to make these videos long. I'm trying to make these videos as short as I can. I talk too much. Okay, so let's go to the daily time frame. Let's look at the bird's eye view before we go into micro. Let's just obviously look at macro as always. Bear with me if I can just find these charts. Okie dokie, we've got the FTSE 2. Okay, FTSE 250 is hit. Okay, that's not the FTSE 250 chart that I wanted. Bear with me. Right, I seem to have lost my charts. Okay, here they come. Bear with me. Here we go. I found my charts. Okay. Right, so let's have a look at the FTSE 100 first. Bring that chart up of the FTSE 100. Bring that chart up first of all. Okay, so here we go. Okay, so we've got the FTSE Volatility Index here, and we've got the FTSE 100 chart here as well. Okay, here we go. So daily chart, bear flag. Okay, so technically that's very bearish. Supports the bearish view given regards to uncertainty regarding Grexit. Okay, from the outset, bearish engulfing candle at previous support equals resistance, and now we have a bear flag formation. So one cannot ignore that. Okay, that's not a very strong or bullish setup, and not a setup that I would like to be long into. Okay, bias certainly on the bearish side there. Now, daily chart of the FTSE 250. Obviously, you can see FTSE 250 into resistance, so that doesn't bode well for the FTSE 250. But having said that, like I said before, that sterling certainly is moving lower, so it is helping the export sector other side of the economy. So hence the reason why the FTSE 250 hasn't sold off as sharply as the FTSE 100, which obviously is heavily indebted or heavily laden with commodities. Okay, so it's very, very important to take that into consideration, and something that you certainly need to keep an eye out for. Okay, if sterling continues to drop, FTSE 250 can and will move higher, given the fact that the export side of the equation is stronger, and that will obviously help and support the FTSE 100 as well, given the cross correlation and the cross market analysis and intermarket analysis approach that I personally adopt, and what I've been taught, it works in theory. Okay, so that's something to bear in mind. Okay, and as you can see, there is a divergence there, so keep an eye on that for that divergence. Okay, so the FTSE 350, that's another one I always look at just to make sure that I've got the right direction. Just obviously we want to reduce as much noise as there is, and it's very similar to the FTSE 100, where obviously previous support equal resistance, bearish engulfing candle, and now we have a bear flag formation. Okay, so again, that's not a bullish pattern that you want to be going long into. Okay, now let's have a look at the actual volatility index, and this is going to be very interesting, and gives us a better, more of a perspective on the FTSE itself. Now, obviously, we've had this potential double top scenario here. So one, if you were a bull, then you would argue, okay, we've put in a double top now, and this is going to be a lower high. And then one can argue with regards to the volatility index, we're consolidating, and we are going to potentially move lower, and obviously we end up down here. Yes, ultimately we are. Okay, ultimately we are. Okay, and that's on two conditions. Number one, Grexit fears dissipate. We no longer have the concerns, etc., regarding that. Okay, they remain in the eurozone, and everything quietens down. The talk of them exiting, etc., and Mr. Syriza via, the Syriza party via Mr. Tsipras obviously starts toning down its rhetoric with regards to exit. Starts toning down its rhetoric with regards to all the debt being written off, and obviously they are not adhering to the fiscal requirements of the ECB. And the austerity measures, obviously ignoring them as well. So if they tone down their rhetoric and there's some sort of compromise there, so on and so forth, then that's going to be very interesting as well. Okay, now if we move higher here on the actual volatility index, now if I look at using my fib from the high to low, we're only in the 38 to 50% yet. We could certainly move higher to 61 and 75, or potentially go back up and test that 26 level again. Given the fact that you've got the Russian ruble crisis and the Russian-Ukraine situation still in the background, which I haven't even touched upon. Okay, given the fact that you've got ISIS in the background, which could kick off at any time. Those absolutely dimwits and morons. Okay, arse bandits I like to call them. Anyway, either way. So basically that's the situation there. Okay, and again. The weak data that we've had, global growth concerns, like I've stated, Grexit fears, so on and so forth. And obviously, I've not even talked about the concept of ECB doing QE and whether or not that'll go ahead, because Mr. Wiedmann, as you know, the Germans are certainly are deeply opposed to that as well. So all these concerns can lead to the VIX going back up to the 26 level, and obviously the FTSE bear flag formation, which I've already highlighted, playing out in full swing. Okay, so just bear that in mind. That's, again, there's so many variables to consider here with regards to the market. We have to take it each day at a time. Okay, that's basically the insight there with regards to that. Now let's have a look at the smaller time frames. So let's go to our FTSE 100. Now FTSE 100, this is a 10-minute chart. Now there was a certain argument for an inverted head and shoulders formation, and that obviously died its death, given the fact that you had weaker data out of the actual US. There was a strong inclination here. I mean, this is your left shoulder here, head, and obviously your right shoulder, and we were supposed to move higher, and the market just failed. Okay, and actually went back and retested the previous low. Although, having said that, we are making a base here, so watch out for support here at 6523, well 6520 to 6510. The pivot low was 6507. So provide that pivot low holds, and we certainly have an argument here for a potential inverted head and shoulders, possibly to continue again. Okay, so just bear that in mind. This is your head here. Okay, your left shoulder is here, and obviously if you push higher here to 6580 and start making a right shoulder, then we can move higher. Having said that, always bear in mind that you have an unfilled gap above at 630. So if oil makes a base, like I've explained to you, if the Grexit fears dissipate and QE talk starts to dominate, then that certainly has a very strong chance of moving higher, okay, and closing that gap. So always be alert of all the potential outcomes. It's just like playing chess, okay? Think of it as chess, okay? So again, like I said, that unfilled gap up here, just bear that in mind, and obviously a unfilled gap here as well, bear them two in mind. Now, where are we? Okay, so we're making a potential base here, and this is going to be very interesting to observe. So you have this potential. One can argue that you do have a potential here for a symmetrical wedge pattern. Horizontal support is below, obviously, as we already know, but the main concern is this 6520 level or 6510 level holding. If that holds, then obviously we have got an argument to move higher, and then one can argue that yes, we have a very strong case here of an inverted head and shoulders. There's your left shoulder, this is your head, that's obviously going in right now, potentially moving higher, putting the right shoulder, bang, off we go. Now if you take the pivot low at 6506, take the neckline at 6580, you're looking at a 70-80 point projection from there, and that gives you bang gap fill. Okay, so 6580, add in say 60 to 70 to 80 points, and that gives you gap fill straight away. Okay, because your gap fill level is around the 6635 6640 level. Okay, so technically it makes sense. Okay, technically it makes sense for the inverted head and shoulders formation to play out, because that will be the catalyst for the gap fill to close. Again, it's a game of chess, folks. Okay, so we have to take all the variables that are constantly moving and shifting at all the time, and obviously take it with a pinch of salt. Add in QE, add in Grexit, add in Russian ruble crisis, etc., etc., and all the additional data that's coming out at any time. Okay, I mean, let's just have a look at the actual calendar for Monday. Okay, so Monday calendar, we have German. Oh, well, forget German. Let's look at UK first. So PMI construction data at 9:30. That's going to be an interesting one. So again, if we do get a stronger number out there, that will help the FTSE certainly move higher. You've got the Centix Context or European Centix investor confidence number at 9:30 as well. Okay, then the other important data will be German CPI data. Again, that will dictate whether or not, obviously, we are going to embrace QE or not. If a weaker number comes out there, then obviously the Germans will be concerned, and certainly strengthens the case for QE, and Mr. Draghi will certainly be a happy chap there. Then we have the ISM data, that's going to be interesting, and other than that, there's nothing more. So it's all about that UK PMI construction data, okay? If that's weak, then obviously you know which way this market's going. Then we go down, test this 6470 level, potentially lower, and that bear flag formation on the FTSE will play out. Again, that will be accompanied with the other headlines and news flow, etc., coming out with regards to the Asian markets, the European and US markets as well. So, okay, I think that's summed everything up from my perspective with regards to the FTSE. Okay, so risk on, risk off, wax on, wax off, and stay sharp, and happy 2015.